Welcome to Investify, where we dive deep into the ocean of finance and economy, bringing you the latest insights and predictions. Today, we're exploring a topic that might just change the way you look at your investments. Have you heard of Jeremy Grantham? He's not just any market analyst. Grantham is a renowned figure in the world of finance, known for his uncanny predictions. And this time, he's sounding the alarm on something big, a potential recession in the US economy, one that could stretch deep into the next year. Yes, you heard that right, a recession that might last well beyond our current calendar pages. But here's where it gets interesting. The Federal Reserve, the powerhouse of economic policy, doesn't seem to agree. They're painting a rosier picture, suggesting that we've sidestepped the threat of a recession. But Grantham? He begs to differ. In fact, he's outright critical of the Fed's track record. Let's be real, the Fed's history in predicting recessions isn't exactly spotless. It's like trying to predict the weather. Sometimes you get it right, and sometimes, well, you're caught in the rain without an umbrella. Now, let's take a step back and look at the economic landscape post-COVID-19. Remember those days? The world was in a frenzy. Economies were on a roller coaster, and demand plummeted like a stone in water, spiraling into what we call a deflationary spiral. It was a time of uncertainty and rapid changes. But then came the government's response: stimulus checks. Suddenly, there was cash flowing everywhere. And where do you think a lot of that money went? You guessed it, into tech stocks. The year 2021 saw an explosive surge in tech investments. It was like everyone suddenly discovered the gold mine that was Silicon Valley. But here's the twist. This surge had a side effect, one that not many foresaw. We're talking about inflation. Yes, as wealth increased and people started spending more, the demand for goods and services shot up, and prices followed suit. Enter the Federal Reserve in 2022. Seeing the economy heating up like a summer day in Arizona, they decided it was time to turn on the air conditioning. How? By hiking up interest rates. It was their way of tapping the brakes on an overheating economy. But this move didn't just affect stocks, it rippled through the real estate market too. Imagine this: mortgage rates climbing, just like the broader asset bubble. It was a significant shift, one that had homeowners and investors alike sitting up and taking notice. First off, let's talk about the tech stock bubble. It's like this giant balloon that's been inflating over time, and according to Grantham, we're inching closer to the point where this bubble might just burst. Now, combine that with the rising interest rates we talked about earlier, and what do you have? A recipe for a serious shakeup in the real estate market. Imagine this: as tech stocks tumble, the shockwaves could send the real estate sector into a spiral. It's a slow-moving yet powerful negative force that could creep into the economy. But Grantham doesn't stop there. He's got some strong words about the Federal Reserve's approach, especially when it comes to Jay Powell's handling of inflation. It's like watching a chef trying to get the recipe right, but somehow, the flavors aren't coming together. Grantham believes that inflation rates, which have been a hot topic lately, are likely to stay on the higher side. So, if you were hoping for a break from those rising prices, you might want to brace yourself. Now, let's shift our focus to the broader market dynamics and what Grantham predicts for the future. Picture the financial market as a boat in the ocean. It's been sailing smoothly, but now it's facing some serious waves, all thanks to the shifts in interest rates. Grantham warns of a looming recession, and not just any recession, but one that could hit us in the latter part of 2024. That's right, a storm might be brewing on the horizon. And what about the stock market? Well, if Grantham's predictions hold true, we might be staring down the barrel of a bubble burst. This isn't just a small blip on the radar, we're talking about potentially catastrophic effects. It's like watching a high-stakes game where the stakes just got higher. But here's a question for you. What do you think about Grantham's predictions? Do you see a recession in our near future, or do you believe the market will prove resilient? Drop your thoughts in the comment section below. We'd love to hear your take on this. And hey, if you're finding this video insightful, don't forget to hit that subscribe button. Stay with us at Investify for more financial deep dives and analyses. As we navigate through the economic insights shared by Jeremy Grantham, it's crucial to understand the broader implications of these shifts on our everyday lives. This isn't just about numbers on a screen, it's about the real-world impact on people like you and me. High interest rates, the ones we've been discussing, come with a heavy toll. They're like a rising tide, lifting the burden of household debt to unprecedented levels. As borrowing becomes more expensive, people start tightening their belts, leading to a noticeable dip in consumer spending. It's a domino effect. When people spend less, businesses feel the pinch. This brings us to the next point, the health of the stock market, a mirror reflecting the vitality of businesses. With reduced consumer spending, businesses are seeing their revenues and profits shrink. It's like watching a plant wither without water. This decline in business profits isn't just a concern for CEOs. It affects the entire economy. Less profit means less tax money flowing into government coffers, leading to potential cutbacks in public services and projects. It's a chain reaction that starts with those rising interest rates and ripples across the entire economic landscape. Now, let's focus on Grantham's warning and the advice he offers. He emphasizes the interconnectedness of economic elements. It's like a spider's web. Touch one strand, and the whole web vibrates. In this complex financial ecosystem, every element is intertwined, and a shift in one area can send shockwaves through the rest. So, what's an investor to do in such turbulent times? Grantham advocates for a safety-first approach. It's about being cautious, like a sailor preparing for a storm. He suggests diversifying portfolios, not putting all your eggs in one basket. One particularly interesting recommendation is the inclusion of gold in your investment portfolio. Why gold, you ask? Well, it's been a bastion of stability for centuries. Unlike the roller coaster ride of the stock market, gold tends to maintain its ground, providing a safe haven during economic turmoil. But remember, diversification is key. It's not about going all in on gold, but about finding the right balance, adding a layer of protection to your investments. It's about weathering the storm with a mix of assets that can stand the test of turbulent markets. As we draw our exploration to a close, let's reflect on the key takeaways from Jeremy Grantham's cautionary words. His warning is a stark reminder of the unpredictability that permeates the financial markets. In this ever-changing world of finance, the only constant is change itself. The journey ahead for investors is akin to navigating a ship through uncharted waters. It requires a blend of skill, caution, and the right equipment. In the world of investment, this translates to strategic diversification and a keen eye on market dynamics. It's about making informed decisions, not just following the herd. And let's not forget the role of gold, a time-tested asset that has stood its ground through many economic storms. In these times of uncertainty, gold shines as a beacon of stability, offering a sense of security amidst the turbulent waves of the stock market. So, as we wrap up, remember this: the financial landscape is ever evolving, and staying informed is key. If you found this video insightful and want to keep up with the latest in finance and economy, don't forget to like this video, subscribe to Investify for more content, and hit the notification bell. Your journey to financial literacy doesn't have to stop here. Check out our latest video for more insights and tips. Stay savvy, stay informed, and most importantly, stay invested.